You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN E-Mini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 17th day of June, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You also will have access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, just point any internet-connected browser to youtube.com/CFRN. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during the show on our YouTube channel, which is youtube.com/CFRN. Easy to remember. Not only do we broadcast live or stream live, on our YouTube channel. But we also archive each and every daily show. Currently over 1,700 daily shows archived there for your viewing and educational pleasure. So with that, let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, and for your grace. As the events of the day unfold, we seek your clarity and your peace. We know that you are with us and for us as we gather together to seek your counsel. Scripture reminds us the more we seek you, the more we will find you. Lead our surrendered hearts to the path of your peace today. In Jesus' name we pray. Amen. Amen. All right, happy Thursday. Hope it is a happy Thursday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Currently here in the U.S., the Dow down 287 points, almost 1%. But on the other hand, the NASDAQ is up 92 points. So we still have that division in the markets. Remember, historically, the four major indices tend to trade on the same or trend on the same side of the street. But of late, a few months now, we've seen this division that historically is not what we're accustomed to in the markets. The S&P 500 is down 11, Russell 2000 down 29, and that's a drop of a little over 1.25%. In the commodity basket today, crude oil down $1.49, trading 70.66 last. That's a drop of a little over 2%. Gold down $85.60, trading 17.7580 last. That's a drop of 4.5%. Silver down $1.18, trading 25.99 last. That's a drop of 6.5%. Now, with silver being down over $1, would be appropriate to point out when the price of silver moves $1 in either direction, if you're trading the large futures contract, that's a gain or loss of $5,000. When crude moves $1, that has a value of $1,000. When gold moves $1, that has a value of $100. When silver moves $1, that has a value of $5 grand. In the Asian markets at the close, Nikkei down 272 points, almost 1%. Shanghai rose 7 points. The Hang Seng gained 121. And in the European markets at the close, FTSE down 31, DAX up 17, and the CAC up 13. That gives us a mixed day in Asia, mixed day in the UK, and due to the NQ, it is a mixed Radio Thursday here in the US of A. So with that, if Michael's ready, we'll go to him and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and today's Thursday, so Dr. Tom will be joining us. Michael, I can see your screens. You're locked and loaded. It's all yours.
Here we go. All right. Good afternoon, everyone. Today is Thursday, the 17th day of June, 2021. Let's start out with this. If you have not taken a free trial with us, go to the homepage here at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that and be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. All right. Now, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of June, 2021. Today we made 4 ticks in crude, 47 ticks in gold, and we lost 1 tick on the ES, but at least we placed a trade on the ES today. Put us at plus 497.5 on the morning session, and today it took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $102.50, and we took a total of 29 trades, so we had a really active trading morning. It didn't start out that way, but it ended up that way. Okay, on the month now we're at $5,562 a contract. That's over 12 trading days, averaging $463 per contract per 2-hour trading day. So far on the year, we've gotten our goal for the day on 114 out of 115 days, and that puts us at $78,092 per contract per 2-hour trading day. That's over 115 trading days, averaging $679 per contract. Now this is on the year, and this up here is on the month. Okay, so this is what we're averaging on the year, and this is what we're at so far this month. Okay, all that really does is tell you that there was a lot more volatility right at the beginning of the year, and you can actually see it in the monthly numbers too. But all right, enough of that. Let's go to the ES and go through what happened on the ES. Now we did have some movement this morning. It just didn't give us a ton of trades. We had some in here. We had 5 trades I show on the ES. Now, right here at the very beginning, there was nothing because the slingshot was all messed up. Okay, then it started giving trades down here. I wanted to see it start putting in, starting a trend, moving down. So we took our first trade right here on the ES, and we picked up 4 ticks on that. At a break even there, we picked up 3 ticks on that to put us at plus 7. Then we stopped out, and that put us at minus 1. Then it got really choppy and didn't give us anything. Came over here, it gave a shorting opportunity that I missed, and then right here, a break-even trade. It had a couple of trades in here that I ended up missing out on, and one really long break-even trade right here that I forgot I had on. There was a shorting opportunity here that would have been break-even had I gotten it, and I was looking for it to get down to this level here. It eventually did. It took it a while. It took it like 15 minutes to get down there. So that was a very short distance in 15 minutes. And then it started climbing up again, but didn't give me any trade setups on the way up. Okay. During the break, it looks like there was one long trade right here that would have been a break even, and a short trade right here that would have worked out okay. Another one right there that would have worked out okay, and one more right here that probably would have been a break even. And you see it dropped all the way down to the zone, through the zone, and now I would look for it to pull back up. Broke dynamic support, but probably pull back up, test that dynamic support, and then continue down. All right, let's look at the gold. Now we had a bunch of trades on gold. Well, let's do crude first. Hang on, let's go do crude first. Okay, let me see, Tim's not in here. No. Okay, so on crude, we started out right here. Okay, and we stopped out on the short trade, right? Well, we had a break even, then we stopped out on the short trade. So I'm sorry. Yeah, this is crude. Yeah. Wait a minute. Something is not right. Oh, that's 10:06. That's why. Okay. Here we go. Over here on our first trade on crude, we were plus 5. All right. Then we stopped out here, and that put us at minus 3. We missed the long trade right here. It would have been a break even probably had I taken it. Nah, it looks like it would have given some profit. We had a break even there. Then we stopped out again to put us at minus 11. Then we stopped out going short here. Then we stopped out going long here. Now this one stopped us out to the tick, and then went up and did what it should have done. But at this point, right over here after this stop out, we were minus 19. Okay, then on this trade right here, we picked up 14 ticks to put us at minus 5. Then we picked up 6 here to put us at plus 1. Then 1 here to put us at plus 2. We missed that, and there was a big move down here, and I don't know what caused that move down, but we only had the opportunity right here at the bottom of it to catch a few ticks. Maybe grab 2 more ticks here, and then it got really sideways right toward the end of the session. Okay, now during the break, you see there was a big move down, and there was 1 trade set up for that right here. And then it got flat again, and I wouldn't have done this, but there was a bounce off the BBC here with the MA1 stayed red and the cycle stayed red. But I would have been looking for more of a trend probably. Oh, I might have done that. I might have said lower highs and lower lows, but either way, kept going, and the cycle was just flat and sideways right here in the middle. Okay, so that was it for the crude oil. Now gold. All right, so we ended with +4 on crude after being down 19 ticks, but we had one good trade really that got us most of that back. It was a +14 tick trade. And I could have gotten it all back on that trade. Now this was our very first trade of the day right here. We lost 8 ticks on our very first trade. All right, our next trade was right here. We picked up 10 ticks. That put us at +2. Then we had a break even there. And we missed a trade there. We missed a trade there. Both of those would have been nice profitable trades. We missed a trade here. And we had a break even trade there. So all 3 of those that we missed would have been profitable trades. Over here, we picked up 10 more ticks to put us at +12. Then we had a break even right there. Missed a trade there and there. This would have been break even. This would have been profitable. We had a break even trade there. Picked up 10 more ticks here to put us at +22. A break even there. Then a +9 there to put us at +31. We missed the trade right here. We had another 7 tick trade there to put us at +38. And a 12 tick trade right there to put us at +50. And we had a break even trade there. So you see gold started out kind of slow. It started out with a stop out. And then it got really active on us. I mean, we had a total of 15 trades in gold. We had a break even trade there, then we stopped out right there. That put us down to 42. We had a +5 there to put us at 47. I was looking for it to get down to here on this move, but it didn't make it on that move. And it did eventually make it. Now, I didn't go for the trade right here because I was probably saying that the cycle was going up too steep. In hindsight, it doesn't look like it was that steep, but I didn't do that. We had a break even trade there. It looks like that's where we ended for the morning session. Now let's see what happened during the break, because look at what happened. There was a lot of activity here during the break. We had this huge run down, no chance for an entry. Had this huge run up, no chance for an entry. Then we got all sideways in here. I wouldn't have done anything, but the only thing that would have been here would have been a bounce off the BBC right there, and it's not really even that good. I wouldn't have done that. It was a long here, and another long there, and another long there. And here we go with the shorts. There was a short there off the BBC, a short there, and a short there. And then it got choppy. There was nothing in there. And it made a big leg down, but didn't give a trade setup, and then it got choppy again. So gold was full of activity today. We ended +47 ticks on gold this morning. Excuse me. So let's go back here to the spreadsheet. Again, if you're going to read the spreadsheet, you got to read all the COTC risk disclosures down at the bottom. Today is the 17th day of June, 2021. Today we made 4 ticks in crude, 47 ticks in gold, and we lost 1 tick on the ES. Put us at +497.5 on the morning session. Today it took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $102 a contract. So we're took a total of 29 trades this morning. So on the month now, we're at $5,562. That's over 12 trading days, averaging $463 per contract per 2-hour trading day. Now we've gone 114 out of 115 days, getting our goal on the year, and that puts us at $78,092 per contract per 2-hour trading day. So over 115 days, averaging $679 per contract per 2-hour trading day. Okay, now if you haven't taken a trial with us, you can go directly here to eminitrainingschool.com. On this page, all you need to do is scroll down here to where it says 1 week free trial. Put in your name, your email, and your phone number. And tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know who took the free trial. We don't know that you took the free trial, so you gotta make sure that you click on that link, all right? All right. That's it, guys. I don't see any questions in here, so with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Looks like you are ready.
Yes, sir. I'm ready. Recap of the recap.
Today, it took 4 trades and 16 minutes to get to 102.50. 102.50.
Good job, as always.
Yeah.
Okie doke. Well, Fed announcement yesterday, guys. Big down day for the market today. Yesterday, apparently the markets weren't too crazy about what the Fed had to say. On the daily chart, we got a window of opportunity sitting down here. Let's take a quick peek at a Logic 247 recap. Now, this has been a challenging week at best. So far, as of 12:20 today, we issued a total of 43 alerts, 6 never triggered. Still waiting on the outcome of 3. They gave us 32 actionable alerts, of which 19% were stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process we teach all of our traders. Now, if we scroll back up to Monday, the week started out with 33% based on that $300 risk profile. And then the next day it came down to 29%, and then down to 23%, and then down to 22%, and then 21%, and as of the most recent recap, 12:20 p.m. Eastern, 19%. The average week over the last 150 weeks has been 20%. We've had weeks as low as 3 and 4 and 5%. We've had a few weeks that were above, I believe, 20%. A couple of those. The average over 150 weeks, coming up on a 3-year anniversary, 20%. Now, those are the logic alerts, which are based on current price action. They come out around the clock, 24/7, via our Telegram private alert channel. An alert could come at 2 a.m. or 2 p.m. It's not based on any time clock. It's based on the opportunity the market presents and when it presents it. We have traders around the globe, so our day session is their night session and vice versa. When an alert triggers, there's a greater probability of it triggering again and even again multiple times than not triggering again. So if an alert triggers while you're sleeping, not to worry, there's a high probability based on the data gathered over 7,600 individual alerts now over 150 weeks. There's a higher probability that it will trigger again than not trigger again. Along with the logic alerts, which come out around the clock, we also publish a static report each evening shortly after the Globex Open, and those are called the concierge trade alerts. That was our original alert service, and they look like this. Last night the alerts came out at 7:25 p.m. Eastern. Globex opens. The Thursday session, which we're in right now, began last night at 6 p.m. Eastern. That's how it worked. Tonight at 6 p.m. Eastern will begin the Friday session. Asia opens, then London opens, then Wall Street opens, and we follow the sun from Sunday night at 6 p.m. Eastern right on up until Friday afternoon at 5 p.m. Eastern. There's 2 numbers for each market. S&P, as an example, the price starts trending up towards 42.29. Then, of course, that's bullish. So the best way to handle these are just draw a line in the sand at that number, draw a line in the sand at that number. And once this report is published, the numbers are good for the entire session. Price starts moving towards 42.29. That's bullish. We're going to look for opportunities to buy the market, buy the dips. The price starts trending down towards 41.97. That's bearish. So obviously we're going to look for opportunities to sell the market or sell the rallies. S&P, Dow, Russell, crude, NQ, gold, and silver. Okay. Now, price came down to the daily BBC. Let's refresh this chart. There we go. Fed announcement yesterday, price came down through the daily BBC, but when price drops to the BBC, that just stands for bull bear cross, bullish above it, bearish below it, anticipation of higher prices above it, lower prices below it. Price came down through the daily BBC, which we expect to be good support when price drops to it, and it was. Yes, we spiked it. However, before the session closed, buyers came in and drove us right back up above the BBC. The support held, just like it held here, just like it held here. Again, we spiked it, but we closed above it. Last night we opened, we had a green candle to the upside. Now this window of opportunity filled on the downside and then again on the way back up. We have another window of opportunity down here, which is just below the low of yesterday, and then the window takes us to the 38% fib retracement and the low of this day, June 4th. And so here we sit right on top of that window of opportunity. We have a new all-time historic intraday high as of June 15th, and that intraday high is 42.58 and a quarter. In the previous day, we put in a new all-time historic closing high at 42.48.50. Now that's based on the September contract. So the new closing high, I'm sorry, 42.46 and a quarter. It's the closing high. And then over here, intraday high, 42.58 and a quarter. Here's the 24% fib retracement of the last leg up. And that needs a little adjusting. So let's do that. How about that? Okay, so from this low to the new all-time historic intraday high, the 24% Fibonacci retracement, we've passed through it. We've passed through the BBC. The next fib level would be the 38% fib down here at 41.68. We've got a swing low here at 41.55 half. We have a bullish cross right here. When we have a bullish cross that leads to an extended move, when price revisits that area, there's a very high probability that area is going to act as support, at least on the first move down. Same is true of a bearish cross. So if price gets through the window, gets through the 38% fib retracement, then keep an eye on 41.47, because that will most likely be good support. At least good enough for a bounce. Now, just like the BBC, when we dropped to that BBC and then closed above it yesterday, we bounced all the way up to 42.2175. That's the high of today's session. So we drop, support holds, we bounce. We bounce where? Up to the step line, which when we approach the step line from below, we expect that to be good resistance. Blue and climbing is bullish. Red and falling is bearish. However, once price gets directly above price, and blue and climbing, see, it's on it one more candle. If we close in the area that we're at right now, or lower today, then what was blue and climbing is going to become red and falling. Okay, just a visual cue to help you understand who's in control, who's got the ball, who's running the show today, buyers or sellers. Okay, so we know based on the daily chart where major resistance is. It's up here around 42.29, and support is at the low of today which is 41.83. Okay? If we take out 41.83 and we're looking for a drop to 41.68, that's the 38% fib. Now, the weekly trading zones, which you'll see on the 30-minute chart, the vertical line separates yesterday's session from today's session. The CTA on the long side was 42.29. If you want to grab a screenshot of the CTAs from last night, you can. It's the line in the sand on the long side, line in the sand on the short side. And so we opened, price triggered the CTA on the short side, and from 41.97 we dropped to 41.83. So from 97 to 83, that's 14 S&P points. That's what the market made available at $50 a point. Price then retraced back to the weekly trading zone. The weekly zone there is 41.99/4200. And you'll notice yesterday, as the Fed announcement came out, we spiked that weekly zone, but closed above it. Okay, spiked it again, closed above it. Ran up to the BVC, which we expect to be good resistance, which took us back down to the zone where we consolidated for about an hour and a half. We passed through the zone, and here's the drop we just discussed. Now, not all triggers are created equal. You see, we have red and falling here on this trigger, but on this trigger we would be shorting right into blue and climbing, which represents support. So that's a pass. Once we go back to red and falling, then it's okay to take that trigger based on market structure and the three-step process. And we put in a swing low from 97 down to 91.25. So 5 3/4 points, $50 a point. We trigger again, but we're dealing with blue and climbing. Price gets above the BBC. See how it served as resistance, 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 and then we finally, we spiked it. This time we closed above it, took out those highs, and we made a run right up to the zone. This zone is 42.21/22. Price came, that's resistance. The market finds resistance on every time frame. Price flows the same on a 1-minute chart as it does on a monthly chart. When the market finds resistance, it's going to go look for support. When prices are dropping, we expect the BBC to be good support. Just like it was on the daily chart, just like it is here on the 30-minute chart. When the market finds support, it's going to go look for resistance, which it again found at the weekly trading zone. These weekly zones, we've published them since December 14th of 2009. They're published Monday morning, 6:15 a.m. Eastern for all of our members. Once they're published, they're carved in stone for the entire week. They don't change. So resistance sent us back to support. Support sent us back to resistance. This time, sellers came in a little bit early. Took us back down through the zone at 41.99/4200. Look at all this consolidation across here. Okay. Now, only 3 things happen at a weekly zone. The most common thing is consolidation. You're going to see that about 75% of the time. The second most likely thing is rejection. And that's what you see here. When the 30-minute candle closes, the only thing left touching the zone is the wick. Price was rejected, rejected. The third and least likely thing that will happen, but it happens, it's called a slice. That's when price slices through a zone like it's not even there. This isn't a textbook perfect example of the slice because we had all this previous consolidation, but here's how the slice typically unfolds. Price slices through the zone. When the move runs out of steam, at an area you would anticipate it to run out of steam. Why? What was once support will continue to be support until broken. So as price is dropping, we have to anticipate this area is going to be support until proven otherwise. Okay? And so when price slices through a zone, what it will typically do is it runs out of steam, it will reverse, return to the zone that it sliced through, which is exactly what it's doing right now, and then that sets the stage for another leg to the downside. So there's the S&P. Here's the Dow. Here's the open last night. The CTA was 33,770. Price triggered. Took us down to the weekly trading zone, which we expect to be good support until proven otherwise. We spiked it, but it held. We consolidated. That's support, which sent price looking for resistance. Here's one of those, not all triggers created equal. Remember, important prices, important areas are almost always tested. Once a zone triggers, it's probably going to trigger again. This trigger took us from 770 down to a swing low of 687. Call it 690. It's about a 80-point drop. At $5 a point, it's $400 per contract traded. Now we trigger again, but we're dealing with blue and climbing. We trigger again, we've got red and falling to support. So from 770 we drop to a low 742. It's about 28 points, $5 a point. Price gets back above the BBC. This is the Wall Street opening candle right here, 9:30 a.m. Eastern. Price comes back down, triggers the CTA again. This time it makes it to the zone. The zone acts as good support. Support sends us back up to resistance at the BBC. We now have red and falling, which makes a short trade more attractive. We come back down through the zone at 770, and it takes us down to a low at 500. That's roughly 270 points at $5 a point. That's over $1,000 per contract traded. On the Russell, CTA on the long side was 2312, and we had a spike high off the Wall Street open that took us up to 2314.3. That's 2 points, $50 a point, $100 per contract traded. Now here was the open last night. We got red and falling. We hit the CTA at 2298. It takes us down to the weekly trading zone, which serves as good support, 2288. So from 98 to 88, well, it's 2288/89, so 9 points at $50 a point, $450 per contract traded. Here, the CTA behaved more like a weekly trading zone. You can think of CTAs. In fact, I forgot to change. This should say. Okay, there we go. 2298. Price drops down to the weekly zone. You can see the wick there. We caught a bounce because we expect the zone to be support until proven otherwise, and this is where the otherwise comes into play. And so this move off the CTA trigger at 2298 took us down to a swing low at 2256. So from 56 to 96, that's 40. So call it about a 40-point move at $50 a point, $2,000 per contract traded. 2245/2246 is the lowest weekly trading zone this week for the Russell. the NQ. Now the NQ is the one that's bucking the downtrend. The NQ ran up to the highest weekly trading zone for this week, 14,175/14,176. Remember, these numbers come out Monday morning, 9 a.m. Eastern, for all of our members. I'm sorry, 6:15 a.m. Eastern, long before Wall Street wakes up, so that our traders have an opportunity to get these zones on their chart, because this becomes fixed support and resistance for the entire week. Now, some will tell you you can't trade support and resistance because that's old-fashioned. There's algorithms now and all kinds of indicators and oscillators with fancy names and high price tags. Well, the truth of the matter is, since the markets began until they end, whenever that might be, price will flow from support to resistance, back to support, back to resistance, over and over, again and again. The indicators, the BBC, blue and climbing, red and falling, those act as dynamic support and resistance because they track price as it moves. But the weekly zones are fixed support and resistance. Once published, they remain the same for the entire week. They do not change. Okay? So we hit resistance. We didn't quite make it back to the trigger. The trigger at 14,045 took us up to 175. So that's roughly 130 points at $20 a point. So with one contract, that move's worth, over $2,000. Now, you may not have a goal of that many points. The NQ pays $20 a point. If your goal is $100 a day per contract, a 5-point move is all that's required. However, the NQ is very volatile. Now, in the live training room, we don't trade the NQ because of that volatility, because we use an 8-tick hard stop on every trade. As Michael is teaching you the methodology and the strategy, he uses an 8-tick hard stop across all markets. We use a fast chart. It's a range chart. And the reason we use the fast chart in the live training room is because Michael wants to be able to show you as many trade opportunities as possible during that 2-hour window. If we were using the 30-minute chart or an hourly chart, you might not even see a trigger during that 2-hour window. Some days you might see 1 or 2, some days you would see none. What's important is that you see the trade setup repeatedly, the entry, the management, the exit, again and again, because everything that we teach is fluid across all markets, all time frames. And there's our friend Dr. Tom.
Hey, how you doing, brother?
How are you?
Good. Sorry I couldn't get on earlier.
No,
we had
no problem.
a lunch planned here.
No problem. Just glad you could join us.
We had Manly pizza.
How was it?
It was good. It was, like a meat lover's pizza, all different kinds of meat on it. So.
Okay. Would you like me to send you the screens?
That would be wonderful.
Okay. Coming at you. And you are the presenter.
All right. I forgot to make notes last week. Do you remember where I ended up?
No. I don't. Not exactly.
But we were talking about inflation, right?
We were.
I think I remember about where we got to, which was, how they make the CPI numbers. Did we get to that? Do you remember?
I think that's about right there.
Okay. All right. So,
now, I don't know if you want to open up your screen a little wider. It seems a little narrow across there, but I can see the slide. But if you do that, it'll probably open it all the way up.
I see what you're saying. What I have to do, I've got one of these 49-inch.
That's the way it is.
Okay. Okay. So that's what it should be. All right. One of these, things like a 49-inch wide curved monitors. And
Gotcha. Okay, now that took everything over to the left side of the screen. Sort of like a split screen kind of thing.
Let me try.
That's good right there. I mean, we can see the slides to the left, but that's okay.
All right, well, let me just do this. I'll just squeeze that up, and I'll get down to where we were. Oh. Okay. Everybody is talking about inflation, right?
Even the Fed.
Yeah, and they're starting to get honest about it. So I called this, inflation is not coming. It's already here.
Mm-hmm.
And in a bigger way than most people believe. And what I said about my prediction that we would have a lot more vegetarians in the United States.
Mm-hmm.
Well, a lot of people are doing it because, for health reasons. But, and by the way, if you do, you do Pastor Greg, right?
Uh-huh, I do.
His daughter-in-law has a website called theveganmama.org,
Mm-hmm.
MOMMA, and it's got a lot of great stuff on it. But, some people are going to be vegetarians because their doctor tells them to. They want to be healthier. But others are going to be forced to it because it's just so expensive to buy meat. I mean, beef and chicken are one of the highest inflation items. There's a lot of reasons for that besides just the general reason for all inflation, which is government overspending, debt makes the dollar worth less, and so therefore it takes more dollars to buy the same stuff.
Right.
But there are some other factors, and for instance, whenever the government gets into mandating anything to do with the market, it never turns out well. A few years back, I guess 7 or 8 years now, they said that they mandated that 10% of gasoline had to be ethanol, right? Well, the cheapest way to make ethanol is corn. So what that did is a lot of the farmers said, well, I'm just sell my corn here because I can make more money. So corn got more expensive in the stores, and then meat got more expensive because a lot of people feed, part of the animal feed is corn. So it has this sort of like ripple effect, the unintended consequences. So National Review wrote a great article. I don't have time to get into it, but I would highly recommend it. Just search for how official statistics underestimate inflation. And little trick I found, if you put a string of words like that in a search and you put it in quotes, it's going to look for that exact phrase. If you just type it in, it's going to look for anything that's got official or statistics or whatever, and you get all kinds of hits on things you don't need. So I would highly recommend this because it tells how they, back in the Jimmy Carter years, how they changed the way they calculate inflation to make it appear a lot lower.
Right.
They took out food and energy. And, I mean, I don't know about you, but that's part of my cost of living. But when they did that, the CPI dropped dramatically. Are you able to hear me okay?
Made things appear better than they are. Yeah, I hear you just fine.
Okay, good. I'm using a new headset. So it's kind of like if you have a gas guzzling car, and it's making 10 miles to the gallon, and you mess with the odometer, and now you're getting 30 miles to the gallon. But you're still really getting 10 miles to the gallon. You just feel better. So it was embarrassing to the government because during the 4 years that Jimmy Carter really destroyed the economy, and mortgages were 16% plus, and so on. Gold went up 600%. Okay, so that tells you something right there.
What a shocking drop today in gold.
Yeah, what is that all about?
I'm not sure.
Yeah, down below 1,800, and we were pushing hard, above 1,900 for a short time. But basically, when the economy's down, then gold goes up, because the dollar becomes worth less and so on. So most people won't admit to it, but for the last like 30 years, the average real inflation has been 5%. But what has the government been telling us for the last 30 years? 2.5% to 3%, right? Roughly half. Well, they shocked everybody recently by admitting, finally, that inflation was at 5.1%. I haven't heard them give out official numbers like that in years. There it is, inflation rate 5.0, and that was for May, the June numbers, but right now it's actually a little higher. They've never admitted it, but now that they're finally admitting to 5%, if you go to independent websites like Shadowstats, it's up to about 9.5%. So what the government tells you is almost always half of the real inflation rate, because they're motivated to show inflation lower than it really is. This is their own calculator that they have on their DLS website. You put in the year that you want to compare, and the current year, and then what you bought. So in this case, I put down that I bought something for $1 in 1913, and look at it, $27.19 today. So the cumulative rate of inflation, a shocking 2,600 plus %. And we had no inflation while we were still in the gold standard. I believe, the gold standard is a God standard. I think God gave it to us as a blessing so that we would have solid economies that didn't flash back and forth from inflation to deflation to stagflation to various different types of monetary crises. When we were on the gold standard, everything stayed pretty much the same. Gold was $20 an ounce back then, and now it's $2,000. Well, it was a little while ago, $2,000. But it didn't just magically jump up there. It went up there because of the dollar losing. Until recently, it was 96% of its value, and so that means the dollar's worth 4 cents. The most recent numbers, it's down to 3.7 cents. So it's going to just keep going down and down and down until either the trend changes or it hits zero. It's one of the two. So if you want to get some accurate numbers on anything regarding the economy, this is a great website. At the top there is official, which is the government issued.
Is that the Shadowstats site?
Yes, it's official versus Shadowstats. And look at the dramatic difference in the numbers. The official CPI is the red one, and the experimental one is basically more of the same. You can see it's just almost exactly the opposite, tracking exactly with it. But Shadowstats is showing real inflation rate now at 9%, and the government's finally admitting to 5%. But for the longest time, when it was 5%, they were saying it was 2.5%. So that's shorter term. And then if you look at long term, all the way back to 1980, At first, they were honest about it, but then when they started jimming with the way they calculate it, you start seeing the divergence. And right now, if you look at the average inflation, going back to 1980, real inflation is almost 13%, and long-term 5%. So basically, if you want to get honest numbers, you don't go to a government economist, and you don't go to a university economist, because the government economists are paid to lie, and the university economists are motivated to lie because they get their grants for their studies from the federal government. So, he who controls the purse strings controls the narrative. But I really recommend anybody that wants to know what's really going on with the economy, look at Shadowstats. It's great. His commentary is solid. I don't know if the man's a Christian, but he's certainly a straight shooter, honest guy. Let's move on here. So, basically the question is food or gas or heating and lighting, air conditioning, is that part of your standard of living? Of course it is. You know what their excuse is, Dwayne? Why they took it out? You can't just do something like that. You have to have a reason for it. They said it's because they're too volatile. And I think, well, have you guys never heard of a moving average? That's all they had to do. If they honestly felt like volatility was skewing the CPI, they just put a moving average on it, right? Makes sense. So anyway, they never included taxes, by the way. And that's a big part of all of our cost of living. Most of us are paying anywhere between 25 and 50% of everything we make in some kind of taxes. It's not just the federal, the state and real estate and sales tax and on and on and on. If they included that in the CPI, it would be dramatically different. But they're never going to do that. This is a one-year chart of the CPI, and the main thing, the reason I put this up is you could see the acceleration back since January, where they met each other. The inflation, both the official number and the real number, has accelerated. So inflation has grown. I showed you that one chart of 200% inflation in food over a period of 30 years, but it's been increasing. So a lot of that 200% has been in the last few years, and particularly since the China virus, we've seen a tremendous amount of inflation. This just shows what happens at the various different time periods after they take out food and energy. So inflation isn't coming. It has arrived. And if we don't plan now for what's coming, which is a complete crash of the dollar, you're not going to be prepared. I want to talk more about this next week because I've got a lot of other data I'm getting in on it. Mm-hmm. I've actually gone back and downloaded inflation data for like the last century. It's really interesting what's happening. Either interesting or scary, whichever way you want to look at it. But the only way to protect yourself from inflation is hard assets. And those are basically gold and land. But you don't want to buy just any kind of land. You don't want to go out and say buy a lot in a housing development that may or may not ever get built. And unless you're just a glutton for punishment, you don't want to buy houses and apartments and rent them out. I was a landlord for a number of years, owned a bunch of properties, and I will never do that again. You know, it's like you get this call at 2 o'clock in the morning, our toilet's plugged up.
Yeah.
I said, really?
Yeah, it's not a fun business.
Whose kid was it that put his favorite dinosaur down the toilet? It wasn't me, you know. Or our window's broken. Well, whose kid threw the ball through the window? Fix it. And the worst was how many air conditioning units I had to replace. Because I would provide them with the filters for the air conditioning unit and say, just all you have to do is take this out, put a new one in once a month. And every year I'd bring them 12 more. I would come back after a year, and 9 of them were still there. And the air conditioning unit would burn out because of all the dust that was collected.
Right.
So I don't ever want to do that again. There is a way to invest in real estate that's totally hands-off, and it has averaged 24% a year for the last 17 years. So anybody's interested, you know, it's like gold. You don't just buy any kind of gold. You buy investment-grade gold. And with land, you don't just buy whatever kind of land comes to mind. You buy the only type of land that actually increased in 2008. Every other category dropped. But this type of land investment, which is, by the way President Trump made most of his money, actually went up in 2008. And again, with gold, you don't just buy bullion. I think everybody should have some bullion. But, you know, 3,000 years now, the cost of gold has remained the same. I mean, you could buy the same amount of stuff, food or clothing or whatever, for 3,000 years. I think it's a pretty good track record. And, you know, it's like a commercial. It's kind of hokey sounding. The guy says, and the price of gold has never gone to zero. Well, that's true. It can't, because of the cost of just getting it out of the ground. That puts a floor on it. And then there's, you're refining it and minting it and so on. But the more important fact there is that it's the only asset class that's maintained its value for 3,000 years, period. So that's the benefit of bullion, the steady and dependable. But it's also the weakness, because frankly, do I want a lot of my money invested in something that's going to give me protection, but I'm not going to make anything on it? Not me. You know, I believe my investments should make me money. So buy gold, buy land, but make sure you buy the right kind. And if you want to know the right kind of gold, then where do you go?
To Dr. Tom. Yeah.
Yeah, but specifically CFRNgold.com.
There's an issue with that link, so you might want to give them your phone number too.
Yeah, I will. And by the way, I checked that out. It's on your end. Either it's not directed. I checked. I don't have that domain in my in the ones that I manage. So you must have gotten the domain yourself.
Yeah, I did.
Okay, so it's either not forwarded or something has happened to it. I thought I'd written you about that.
I got a lengthy email from your tech guy. And when you type it in, it takes you to goldenartreasures.com/CFRN. So I'll look into it though and see if I can figure it out.
Yeah, they can go directly there, goldenartreasures.com, and then /CFRN.
But then once you get there to that page doesn't load, which
Really? I'll check that out.
I don't know.
I'll check that out. Anyway, you're welcome to call directly, and I'll send it to you. And it's just simply 561-753-5998.
561-753.
5998.
5998.
Now, let me tell you how things are working now. When I first started coming on the Dwayne show, I love talking to people, and people would just call me up, and I would take the calls. If I was on a call, I'd call them back. But there's been a big change since 18 months ago. 2% of Americans own physical gold. I've thought about this in like the Money Show. There's several thousand people there, and I'll ask them how many people here own gold. 10% would raise their hands. And I said, now, if you own gold on paper and you don't physically have possession of it, take your hand down, and it'll be 1 or 2% that's
Right.
the hands up.
Right.
So that has changed. We've gone from 2% to 20%, that's 1,000% increase in the last 18 months. So people are starting to understand that there's safety in gold. And so you definitely need to at least have some of your assets, some of your net worth in there. If you have as little as 10% and everything else goes up in smoke, then you'll be able to maintain your same lifestyle. Because when 90% of your net worth goes away, that 10% is going to go up about 10 times. So if gold was 1,700 the day before, it's going to be 17,000 the day after. That's based on your typical hyperinflation in modern times. It's been in the last 25 years. So we're getting only modern economies. 28 of the economies of the world, that's about like 15%, have gone through hyperinflation. So, if you had, like I said, a little bit of gold, and you can't depend on your land during hyperinflation. They typically last about 4 years. Your house, your property that you own, it won't go up in smoke like the cash in the bank or the mutual funds or whatever, but it won't be liquid, and that's the problem, because they're not going to be looking to buy land, they're going to be looking for food for their kids. So, I still believe that land should be part of your diversified portfolio, but you can't depend on it during the actual event. Now, when the event's over, when the people basically force the government to go back on the gold standard, like it's done in many countries, like I talked about that one time, the people just said, either you go back to the gold standard or, you're not going to be reelected. When that happens, then your land will be liquid again. And but it's the gold and the silver that'll get you through. And even if you have just a little bit, it will make the difference.
All
That's all I
right.
have to say.
Let's give them that telephone number one more time.
Okay, 561-753-5998. 561-753-5998. And let's work on connecting up the CFR and Gold together. I need to talk to you anyway, so when you get off the radio today, give me a buzz.
Okay.
You know the number now, right?
I do.
Okay.
All right.
God bless everybody.
God bless you, brother.
Bye-bye.
Talk to you soon. Okay. We are back. John called me while we were talking to Dr. Tom. So, he said he might want to come on today. It's been a long time. So I'll ring him back. And we'll see what we see. Hey John, Dr. Tom just finished up, so if you want to come on, now would be the time.
Yeah, can you send us the thing so I can get into the system?
Yeah. Yeah.
Thanks.
All right.
Okay.
Okie doke. So, give me a minute here and I'll send John an email. Because never mind. Okay. Alright. I sent him the link, so we'll see if he joins us here in a minute. Alright, we had gotten through the NQ, the CTA on the long side. We triggered on the short side at 13,882 shortly after the open. And that took us down to 13,842, 82 to 42. That's 40 points, $20 a point, $800 per contract traded. And then we had two-sided action. We traded on the long side at 14,045. Took us up to our highest weekly trading zone on the NQ for this week. Alright. Crude oil. CTA on the long side was way up at 72.70. On the short side, CTA was at 70.40. And it took us to the weekly trading zone at 69.75/69.80. Okay. The price drops to a zone. We expect it to be good support, and it was. We consolidated, we caught a bounce, and we came down and we triggered the CTA on the short side, 70.40. And it took us down to the zone 69.75/69.80. So that's a $600 per contract move. Price is now backed up to the weekly trading zone. We expect it to be support on the way down. On the way up, we expect it to be resistance until proven otherwise. And so if in fact we do get good resistance here, we've got the weekly zone, potentially good resistance, the step line, red and falling. So if the resistance holds and we get a nice trigger here at 70.40, we've got red and falling, which we need, and that could give us another trip right back down to the weekly zone, which again is 69.75/69.80. And the swing low was 69.77. Remember, these zones go out to our members Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up for the week. We go to work Sunday night, 6 p.m. Eastern, when the Globex markets open. Wall Street doesn't go to work until Monday morning, 9:30 a.m. Consolidation. We did have a slice here. Okay, there was previous consolidation, and this time we sliced. We did not retrace back up to the zone as we typically do. However, as we came down through this zone, we're now back. We're from zone down to the zone, back up to the zone. Now we're just waiting on a move to the downside. On gold, Let me look to see if John's here. Don't see him yet. All right, so the CTA on gold. We got a weekly zone. That's the lowest weekly zone for this week. These are old zones down here. This week's lowest weekly zone for gold, 1812/13. So we opened last night. We came right down to it. We spiked it. We caught a bounce. Support takes us to resistance. Resistance sends the market looking for support. And we found a little bit of support along the way, just enough to bounce us up to red and falling in the step line. But just a nice trend down. And so from 1802 down to 1772, that's a $3,000 per contract move. 30 points, $100 a point. 1802, 1772, we overshot that a little bit. Now we're building a green 30-minute candle. We're above red and falling, but we're right at the step line. Okay, and so if we don't find resistance here, if buyers remain committed to their positions. There's John. All right, John, welcome to the show.
Can you hear me all right?
I hear you just fine.
Great. Thanks for inviting me back.
Really good to,
Sorry, I missed,
really good to hear you.
missed
Yeah, it's
everybody.
been a long time.
Yeah, today I'm starting to feel, first time it's kind of felt normal for a while. So thanks for, good to be back anyway. So listen, it's a very, very big day today. That's why it kind of is a suitable day to come back, because there's a lot of things going on that could be of value to everybody. And I noticed you were just looking at the gold, and I mean, it's, we've been bearish on the gold, basically expecting a kind of a dip into the summer. And it's if you think about it, I mean, you've been probably keeping people abreast of the lumber situation and the
Yes.
copper and everything else that's been going on. And so the inflation appeared in the futures market first, right? Long before it showed up like everybody's freaking out about right now. And the grains, of course, as well. But if you look at the grains, they've been crashing for the last couple of weeks. We basically, if you remember, about a year ago, we basically outlined the lows in the grains and said that that if we broke above certain levels, we'd have meteoric rallies to the upside, which is what happened. I mean, we almost went to new all-time
Hey,
highs.
John, your phone keeps calling my phone over and over.
Oh, I'm sorry. I don't know why, because I'm not doing anything.
That's
It's
weird.
not,
All right.
so
I just answered it and hung up, so maybe that'll.
okay.
And then
yeah.
it just started.
No,
Now it's calling again.
Oh God, I don't know. It's kind of weird because I've been getting some crank calls from people recently, and maybe it got something to do with it. Yeah. But, I'll have to get that fixed. But thanks for letting me know.
Okay.
So, but I mean, I'm actually bullish on the market. It's still very bullish. Expecting, I think, to be honest with you, the highs could be in anywhere from next week to next month. I'm kind of targeting late July, mid-July, late July as a potential top, and it could be a blow-off top. And I'll just kind of give you a kind of a sense of what we've been doing the last few days. We figured there was going to be a sell-off in the markets yesterday with the Fed. Usually, I mean, by the way, this is a little kind of a secret to tell everybody. Actually, I kind of noticed this with Trump one time. Do you remember the time that they set up Trump to talk in the last hour, and he was going to announce some very bullish news. And then, coming up to the 3 o'clock hour to Trump's kind of, address, the market took a big hit. And you sort of say, well, why is that happening? If the guy's going to speak in a minute, why would the market be selling off?
Right.
So, but what often happens is you kind of get a dip before a big rally. So when you get these dips, and we're in a bullish trend like we are in, you've got to, you've got to buy the dips, and you've got to figure out, a good way to take advantage of it. So we actually call the lows overnight on this market. Usually when the news is good coming out of the Fed, which was spectacular yesterday, there's sometimes it bottoms at 5 o'clock in the morning. Sometimes it was closer to midnight last night, I think, where the actual extreme low came in, and then we had a retest of this low just a short while ago, which was a bit of a surprise, I'll be honest with you. But we were mostly focused on the NASDAQ, and the NASDAQ made an all-time record high this morning. And when it got up to 14,195, or I think got to 14,200, we sold it at either 190, 195, can't remember. But we went short from that, and we covered it right down at this low when the Dow got down about 400 points. As it turns out, last time I looked at the Dow was up about, it was only down about 200. So it's already starting to catch up, to catch up a little bit with the NASDAQ. And the NASDAQ is once again approaching new all-time highs. This is not unusual. Sometimes when you go to a new all-time high after a while, remember, we haven't been to an all-time high now for a while on the NASDAQ. So the often, you go to a new all-time high, you back off a bit, and then you have another shot. But I'm starting to believe, in all honesty, that this is going to go parabolic, possibly go parabolic into the July top. There's not much in the way economically between now and 6 weeks from now, or even a month from now. And generally speaking, the early part of July is usually very bullish, first half of it. So, and the UVs, the UVs and the VIXs and the triple Qs have been going down and down and down, and that's obviously very bullish for the market as well. I mean, even today with the Dow down 400, the VIX is lower. I mean, how do you reconcile that? So now the metals, have been hammered mercilessly here in the last day or two, which is fine. It's a good thing for people who missed the last bottom, because you may get another one. And the next bottom in gold, you have to be a buyer. You have to be long some way in some form, because I think, come August, September, there's a bottom coming together in the metals, possibly even down at a double bottom of where we were before, around about 1675, or even a lower low. And one of the reasons I'm saying that is because the palladium, when the palladium got hit right ahead of the February sell-off last year, it was almost an all-time high. It was an all-time high, 2,900, roughly 2,900. And next thing you know, it gets hammered down into the teens. And the last few days, the palladium's been kind of giving false bullish signals, and next thing you know, it reverses, and it's absolutely being taken apart here today and yesterday. And I consider that to be pretty negative for the metals sector in general. Also, copper has been mercilessly has also been hit very, very hard, and I think that's great for people who missed the last move in copper, because there will be another upside move, and it might be the same size again. Goldman Sachs very, very bullish on copper. So all we're seeing now, we sort of had the realization that inflation is under everybody's faces, and yet the futures are getting hammered. Everything from lumber to copper and everything else, and the grains are getting tremendously hammered here. So it's up to everybody, if they're interested, to sort of stalk these markets, during the summer, and get long, be ready to get along for what could be, could be potentially all-time record highs in grains, in copper, and in the metals. I think, look, I know we've had a target of 8,750 for gold for a long time, and it may get there eventually. But I think more realistically, I think there's a very good reason for gold to get to about 3, 4, or 5, any one of those three numbers, without getting too extreme, and 3 or 4 or 5,000. Now, it's kind of interesting because you may have heard about a week ago when this inflation number of 5% stood up, and they were saying it was the biggest move since 2007, and we all know what happened after that. You know, what's interesting about that is the bottom was really the late 2001 253, and in you know, early 2002 we started going higher, and by 2007 we were sort of shooting up towards 1,000, and actually we pulled back a bit, if you remember, into the 2009 lows, and then we basically tripled off that number to the all-time highs. You know, you could call it a double off the 2000 or a triple off the 700, you know, something like that. So you know, we basically almost tripled to the highs in 2011. And so I think what is kind of ahead of us is, you know, from the sort of 2007-8 where we were last, this 5% showed up. Where did the gold market eventually go? Well, it doubled or tripled, you know, depending on which level you use. So when you say, you know, we're around 2000 at the moment, so I think we've got a pretty good shot at going anywhere from like 4,000 to maybe 6,000 in the same way, or maybe 5,000 plus, something like that. And I think the odds of it happening are really high. Now, you know, if you notice, the dollar is going up dramatically today. This is something we've been waiting for. I think there's a kind of an overdue dollar rally unfolding as we speak. So, you know, and it may, you know, who knows, you know, it may get pretty strong. It could go to 93, 94, even higher. But I think after that, you know, maybe is when the inflation is going to come in again and possibly lower the dollar and a lot of other things. So that's kind of the story at the moment. Now, the reason I raised the NASDAQ going to an all-time high, which it's almost at as we speak, and it's, listen, this thing is really, you know, we put a very bullish call out a few hours ago at the bottom when it was down 400, because I think, you know, you're seeing it's a little bit like the rally into the February top. You know, we're really starting to see some really strong upside action in a lot of the leading stocks, especially the FANGs. And so, but it's worthwhile noting, says, I don't believe, now look, I could be wrong, because you can get a non-divergent top and you can get a divergent top. I would call this a non-divergent top at the moment because the NASDAQ's leading the way higher. And as you know yourself, Dwayne, as you probably read in The Wizards, is one of those books, you know, when markets start hitting new all-time highs, you have to pay attention. They're not doing it for, you know, for fun. They're doing it for reality, because, you know, it's very, very bullish. And it's the same with the lumber. You know, we've had a tremendous time with the lumber. We basically, look, we were late to the game. You know, who doesn't regret buying one contract of lumber back in April last year when you could have made $1 million just holding on to one contract? That's an incredible statistic. I think it's ever happened before in terms of leverage of what you could have bought a lumber contract for back then. So, you know, when it started going up the limit, we decided to get involved, and we started off with one contract, and we started increasing the number of contracts like Dwayne does, you know, going to 5 and 10 contracts. And believe me, it certainly focuses the mind when you start realizing what you can make in a day by being long 50 or 60 contracts of lumber, which is our current position. You know, it runs into the millions every day because we're trading in and out of the lumber very, very accurately. And I think we've done an incredible job. We basically were long from under 1,000 all the way up to 1,750 or so. And then we went short, and apart from a couple of rallies, we basically have been going down. You know, we went all the way up from 900 and all the way down to 900 today, close to it. And that represents millions and millions of dollars if you had been trading, you know, 60 contracts a day. So actually it's close to like 15 or 20 million. So the point is that, you know, this guy on CNBC, this professor out of Pennsylvania University, made an interesting point, you know, which is the lumber is still at an all-time high today, even though it's fallen from 1750. So we're dealing with a very unusual situation here. But again, the lumber is telling us that we're getting back to normal. And by the way, you know, if we, in this next inflationary trend, we may be in for another big mega move in lumber. So I think if you're, you know, look, it's a risky market. There's a lot of slippage in this market and sort of jumps all over the place every day. So it's, you know, trade it at your own risk. But if you can trade it profitably, and I was going to go to the reason I thought of lumber is because I wanted to explain the importance of understanding what a limit move means in the lumber, in any market, frankly, but in the lumber in particular. A limit move is really, you know, there's a lot of information crammed into a very small amount of action in terms of a limit move. You know, if grains go limit up, why are they going limit up? Is it because China's buying tons of it, or there's a shortage of grains, or there's a drought? You know, those are usually the reasons why limit moves occur.
Right.
And it's very important, I mean, in terms of helping you with your work, Dwayne, you know, I think it's important to educate, you know, what I just raised out of the Wizards book. I mean, these wizards didn't get to be billionaires for nothing. They figured it out. And, you know, it's just the same as you and I have been, you know, for a decade or longer, you know, how we've stressed the importance of markets making new highs. I mean, you know, the fact of the matter is anybody who's ever bought a contract in their life under 140 and 170 on the NASDAQ today is a winner. You know, there's no losers. Everybody's ahead. What does that tell you? It tells you that if this thing keeps going up, you want to be buying more. And you know, that's what we did with the lumber. We started one contract at like 100 and 900 or something, and by the time we got to 1750, we were like 25 contracts. And so what you've been teaching everybody to do the same. You know, it has to be done accurately, and it has to be done cautiously and with risk control if you can, because these markets, in just the same way as the NASDAQ, I mean, who would have thought an hour ago, you know, or a couple of hours ago, when the Dow was down 400 and the NASDAQ was, you know, down near the lows of the day, that we'd be back up, you know, where we are today. I think that's the market is telling us something, and it's telling me that we may go parabolic, you know, because the market, the NASDAQ here's the point I'm trying to make. Why am I on today? Because the NASDAQ's making new all-time highs and nothing else is, right? Or maybe a couple of other things. But the main indices are weaker and the NASDAQ is stronger. It's almost impossible for the market to go down under these circumstances unless there's some kind of like, you know, exogenous event like World War III or something. Mm-hmm. But you know, this is very, very bullish for what's going on. It's kind of postponing, you know, any kind of a top for a while. Now, when we have to be worried is when the NASDAQ isn't making new all-time highs, and neither is the S&P. And notice how the S&P has sort of led the way higher. And then a couple of days ago, the Russell almost made it. So you've been getting these kind of strong bursts. And speaking of strong bursts, I want to tell you about a couple of bursts that have happened in my absence. One of them was on GameStop. You know, I was watching GameStop, obviously, when it was sort of coming off the recent blows, you know, that have been talked about. And I noticed that one day it was like around 35 or maybe the 30s, and it suddenly jumped like very dramatically, like, you know, like $5-10 in a day, bang, and the next thing you know is like a 40, or maybe it went up a bit, and then it kind of came down and fooled everybody, sort of came back to the 40 level, and after that it took off. And of course, you know, everything that's happened to GameStop since, which we've traded almost every tradable move in this thing since then, because it's the greatest trading stock in history. It obviously, if it's screaming higher, it's validating what I've been saying about lumber moves being up or down. When a market goes limit, everybody in the world wants to be long. Okay, so if it's going limit up, if it's going limit down, everybody wants to get out, because if it's locked limit down, you can't get out.
Right.
So people are going to be selling it all day trying to get out because they're scared to death that it might be limit down for a week or a month, as it turns out. So these are very important things that I'm passing on to you today to understand the dynamics of the market much more. Now, speaking of dynamics, I happen, look, I'm getting very good, very accurate at making intraday calls even before the market opens. I put out a call on the EVs today, the electric vehicles. We're getting a nice rally in Tesla. I had a guy short. He covered around about 600, maybe 595, something like that. Last time I looked, it was up about 14. We shorted it down a bit, went back long. We did the same with the Enphase. I mean, Enphase got hit very hard the last few days. It's a very real quality solar stock. And we sold the highs this morning, during the first half hour. We bought it back about, $6 or $7 lower. It's back to the highs again. This is what we're doing every day now. We're doing the same with the vaccine stocks, which again are fantastic trading stocks. I mean, look, you don't have to be a rocket scientist to figure out that, they're selling billions and billions of vaccines now, and mRNA is over $200 a share. And it tends to go up every time there's a dip. So, it's almost like free money if you can trade it, because it's almost inevitable these vaccine stocks are going to continue. Listen, fortunately for Trump, and thanks to Trump, the world has approximately 2.4 billion vaccinations completed, which is not bad considering that's about 1/3 of the population globally. But there's a huge amount that needs to be done, and that's in half a year, which is pretty amazing. So hopefully in another half year we'll be at 5 billion, and maybe into 23 by we'll get to the full vaccination. But the odds are fairly high we won't get above much than 6 billion people. There'll be a whole bunch of people that don't get this vaccine, and that's regrettable. But it's what we have to. That's the reason why we're spiking in these recent. We've done extremely well. I mean, it's amazing. France, Germany, and Italy, which were raging a month or two ago with out of control infections, are down to like less than 1,000 in new cases, which, considering the size of Germany or France, is amazing. So we're certainly making a tremendous amount of progress, but this is a very, very dangerous virus that keeps reinventing itself, and you just can't rule anything out with this thing. It's who knows what happens if there's a new strain that doesn't get beaten by the virus, then we're going to start over. So but thanks to God, thanks to everybody, because I think the world would be a very different place if we didn't have these vaccines today. And I think the vaccine themselves are giving people a lot of confidence, and hopefully this nightmare is close to being over. And a lot of us have had personal nightmares with this, myself included. It's just been unbelievable.
I'm sure glad to hear you're feeling better.
Yeah. So but as you know, I haven't been idle. I've been kind of studying here and really doing the best I can. Circumstances with what's going on, and look, I'm just looking at Apple here. It's just amazing. I mean, Apple got hammered here in the last few days. So did Microsoft, and look at the rebound in the stocks. It's really impressive. So is Amazon. I mean, I actually said about a week ago that I thought Facebook would hit 1 trillion value. It's almost there. Microsoft's probably heading for 2 trillion. Amazon again, and Apple's already there, I think. So we could really have. I mean, the way I'm looking at this market today, I'm kind of like, amazed. By the way, the semis are, have been very doggish recently. Some semis have done very well, but AMD, sort of no-brainer semis, for some reason have been very subdued and constantly getting hammered. But they're finally breaking out today. So AMD is at a 84, looking very good. Xilinx, which is taken over is up $6 or $7, looking great. AMAT is another one that's been performing extremely well. Telluride is another one, TEL. And ASML, which I call the Intel of Europe. is over $700 a share. It's just fantastic. So, this is the fact that, and look, it's why I watch the semis so much is because, basically the semis gave you the clue to the top in 2000, and they're probably going to give us the clue to the top in 2021, sorry. So, when maybe a month from now, if we're looking at a possible top, we might be looking at the opposite of today, beginning or something like that. So, that's the way. And by the way, there's another thing that kind of like stood out here in the last few days. You've heard me enough times say that platinum is a tremendously important leading indicator. And as you know, platinum did get up to, I think, about 1,200. Not as good as we thought it would get, but it certainly rallied off the 800 level or even the 700 level of the COVID extreme bottom. And today, platinum it just can't even find a bid. It's just devastating. It's probably limit down or close to it, and that unfortunately doesn't bode very well for the metals either right now. Now, I'm not looking at a disaster in terms of the metals. I'm just looking at them pulling back to another buying opportunity, which is one that people should be taking advantage of, because I think basically you've been given the hors d'oeuvre, you've been shown what can happen with these metals and the metal stocks. And look, when the metals really get going, obviously the Robin Hooders and everybody else are going to be all over these things, and they're going to have good reason to be all over them. So that's kind of my take on the markets. I think hopefully the next month will be one of the best trading months ever. And we'll have a lot of opportunities. I am following a few stocks at the moment. I don't have any special interest in these stocks, but they've been going extremely well recently, and I've been putting out like 500,000 buys to make the point that I feel very, very bullish about them. One of them is a little company called PIRS. I just picked this out of the blue. But what's special about it is, these stocks, sometimes they do things you just can't fathom, and they're sort of like no-brainers. And I think Dwayne, you and I you might remember in the early 2000s, there were about 8 or 10 biotech stocks in the first week of 2000 that were, they were actually a lot more valuable than most of the stocks we're picking up these days. They were sort of like $8, $10, maybe $15, stuff like that. So anyway, they all look pretty good. And I actually wrote a long article saying, if I was the CEO of Merck, I would take a 10% stake in all these, because they all look like cancer promise and that sort of thing. Right. And or buy them outright, right? So guess what? They all went up about tenfold. I'm not kidding you. Like in the first month or two of the new millennium, this is how crazy the market was back then. I remember buying, I think it was Jaron, about $8, and it went to 135. I mean, like very fast. So why I'm just bringing that up today is because this PIRS was down. I picked it at I picked it. Oh, sorry. It came. They announced a deal, right? I mean, this is like a 1 in a million deal. Okay, they announced a deal where they've gone into an agreement with Genentech. Who's Genentech? Genentech's the original biopharma stock. It's the first one that ever went public and set the world on fire to biopharmaceutical research. So it's like Amgen. It's like, it's been around for 30 years. They've made a deal with Genentech. I think they get 20 million, and I don't think they've reported receiving that yet. 20 million like down payment, and they can earn up to 1.4 billion in royalties. I mean, everybody's asleep. I mean, I would have picked this thing up in a heartbeat if I was a mega drug. Well, how can you lose if you could pick up a $200 million asset that could be worth 1.4 billion? I mean, what's taking, or at least not take a stake in it? You gotta have rocks in your head. So this is one that we think has. And look, when these stocks take off. You know, there's stocks, there's 10 or 20 stocks every day that go up. Like sometimes they go up crazy for no reason. Some of them have gone to 100. I mean, Sava is one of the ones that I picked. I not only picked it on its uptrend, we sold it up around 100, maybe shorted at 120, something like that. Came back down to about 40, 35. I put a guy into it. He was very keen on the stock. I said, buy it. Unfortunately, he got out too early. It just went up to $100 again yesterday, which I predicted ahead of time. Just the same as I did with GameStop and some of these other stocks. And APPN, I mean, that was the first one, you know, went to 200. It came back down to, I think, 40 as well. I said it's going to go back to 200. People thought I was bonkers, and it actually happened. So, you know, these things, and look, this PIRs could be one of those. Certainly, I think it's going to go to $4 or $5 maybe in the next few days. Now, listen, these are risky stocks, so don't take it from me, but do your own due diligence. But they're pretty interesting. Now, there's another one called MICT, and there's two other stocks called, one is FUTU. That one went to 100 before it came down, and in the first month of the year, first couple of months. And the other one was Tiger. And what's so special about these stocks? They're fintech stocks, and so is MICT. And MICT, we actually got people into as low as $1 and a quarter, $1.25 or so, $1.30, $1.40, $1.50. Right now it's trading at $2.24. It looks to me like it could hit $3 in the next few days. It's acting really well. There's another one out there called CTXR. Now, BIIB is a stock that is very interesting. It's had a number of heart attack moves. You know, it's dropped $100 a few times in its life the last few years when it failed to get FDA approval and stuff. But what's interesting and what I identified about this stock is that it's kind of crazy, really. And it happens with a lot of stocks. You know, in fact, there's another one today that from yesterday, CVAC dropped $50-something overnight. It was down about 52. We decided to take a punt on it. Last time I looked, it was only down. It was up at 54, so it got up about $6 from yesterday's drop. BIIB had a drop like this a while back. It turned out to be the low, and it's been kind of going sideways to upwards as it regained some ground. And then I know a couple of things happened. I put another buyout. I automatically put a buyout on stocks like this, and when they're sort of pre-FDA or something like that. And then John Nigerian, who's a very famous guy, said he was long options based on the options activity. And literally within a couple of hours of him saying that, stock went up $160. So we sold it right at the highs. We went short. We took another 100 on the downside, roughly in and out. And right now we're probably a little bit long on that one. But that's the reason why we're, you know, these, when you get these mega moves, you know, you get things that happen you just can't explain. I mean, sometimes stocks go up for there's not even news out on them and they go up, and that tends to be pretty bullish. So when you've got, you know, compelling news in the pipeline, what it looks like on little stocks like Peers and CTXR. So the reason I've mentioned this CTXR, which is acting very well today, you know, I'm getting some people who we got that one a little bit late. We were in at 250. It's about 370 today, something like that, 380. It's still, you know, jerking around, but it's acting really well. And this is the kind of a stock that, you know, could easily be $4+ or $4 or $5 tonight or tomorrow or in the next few days, because the BIIB deal has rendered every Alzheimer's stock in the world undervalued. Another one we called a few days ago is AVXL. You know, we got a fund manager in London. We're kind of coaching. I think I can just tell you he's up $6 or $7 grand today on just a few different trades, and he's been in and out of Tesla. I mean, he's probably up 10 or maybe even 20 grand in the last couple of days, just off my advice. So you know, a lot of it has been made. And by the way, he's got a huge position in this MICT. He's got 200,000 shares. His friend has got 2 million shares. So there's some pretty big guys in these stocks who believe big on where they're going. So, I just thought I'd tip those out. There's no guarantees. You can lose 100% of your money with stocks, so just be careful. But right now, the solar stocks just starting to give me a little bit of a sell. Apple's coming off. So, here we are again. We're back up at near the highs of the day, and we're running into trouble. I can't put out alerts at the moment because I'm doing this, but I would have if I had been watching the markets that closely. So I'm not particularly worried about this pullback, frankly, right here, given the way that the Dow has gone back up. But with a bit of luck overnight, we'll work our way higher into Friday. And if we do, I think if we close strong on Friday, then we will possibly have a very good week next week. One of the things that we've also been doing very, very well on is Bitcoin. We've been trading almost every tradable move in Bitcoin. Probably about 90% of them have been accurate, winners every time. The few times we've had small losses, nothing big, but we basically called a crash in Bitcoin ahead of time. And unfortunately, I said it would get up to about 42. We got to 4160 yesterday, I think, and turned down, or the day before. And we're 38,500 now, which is a bit of a disaster. And the Bitcoin stocks are coming off, 39 maybe, and the Bitcoin stocks are coming off again, including this coin, which has been a disaster for anybody who bought it. And so one of the reasons why coin is doing so badly, everybody thinks it's the biggest trading thing in the world, but when from what I'm hearing, when you trade Bitcoin with Robinhood, they don't charge you anything, so they must be getting a lot of business from coin, and maybe that's the reason why that stock is underperforming. It could rebound at some point, and it could go for all I know, go up $300 or $400 again. But at the moment, it's acting really, really badly. And look, the Bitcoin stocks made a new high this morning, almost monthly highs, and they're already coming off. So, and I think it's very troubling when this maniac at MSTR, MicroStrategy, who thinks Bitcoin's going to 100,000 or 1 million. And he's out there borrowing 400 million to get into Bitcoin. it's kind of like Elon Musk, going into Bitcoin the way he did, and it turned out to be a disaster, because the day that Tesla bought Bitcoin was the high of Tesla, because the market doesn't want to be speculating on Bitcoin. They want to make sure Tesla's a profitable business selling cars, and succeeding in the car business instead of speculating in Bitcoin. And so, that to me, that was like the biggest bell you've ever heard ringing at the top. And you can't argue with what happened. We look at where we were and look at where we are today. So, and unfortunately, he's got other troubles too, that are, the competition are getting better all the time. They're starting to put cars out that are better looking than Tesla. They're more, modern, and some of them are just unbelievable. Some of these new cars, and then you got, look at this new Cadillac. It's a beautiful thing, that Cadillac Lyric, and then you got Mercedes and BMW and Audi and all these people. Unfortunately, all these mega bulls. This is how markets eventually top out. Tesla cannot go to the moon forever. It's certainly done better than almost anybody ever imagined, but most of the stocks that Cathy Wood has bought, and she's an incredible stock picker, are underwater today. She's including a lot of the Tesla she owns. So, this is how bear markets, bull markets come to an end. They get up to levels where things change, and you got to recognize those changes, because, like I say, in a month from now, or maybe sooner, we could be looking at a day that might be hard to take rather than today. So, on that note, I'd say thanks very much for the time, and I hope it was beneficial. And thanks very much to Dwayne for inviting me back on.
All right, John. It's good to hear from you. Glad you're feeling better.
Okay, all the best.
Take care.
Bye.
All right. Yesterday we talked about struggling with change, being stuck in a rut. Today we'll talk about not listening to the accuser. Revelation 12:10. The accuser of our brothers and sisters, who accuses them before our God day and night, has been hurled down. A man who worked in an office loved to play a particular trick on new employees. He would approach them and whisper, "They know what you did," then walk away smiling. First the person would look bewildered, then they would get anxious and wonder, "What have I done?" Then they would think, "Who are they? What do they know? And what are they saying about me?" And since even the most innocent have a knee-jerk tendency to conceal and protect, the new employee would walk around all day anxiety-ridden. That's exactly how the enemy works. He casts aspersions. But there's good news. Revelation 12:10. The accuser of our brothers and sisters, who accuses them before our God day and night, has been hurled down. They triumphed over him by the blood of the Lamb and by the word of their testimony. There's an unfailing strategy for silencing the voice of the accuser. What is it? Remind him that the blood of Jesus Christ has cleansed you from all sin. Just as Jesus defeated Satan in the wilderness, you can defeat him every time by standing on the truth of God's word. It's not God who makes you feel condemned. He wants you to know you're loved, forgiven, and fully accepted. Paul writes in Romans 8:33, "Who shall bring any charge against God's elect? Christ is at the right hand of God, pleading for us." So stop beating yourself up. Jesus came to save you and let you know that the penalty for your sin has been removed and its power over your life has been broken. God sees you today as righteous, and that's how you need to start seeing yourself. Go read 2 Corinthians 5:21. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.